Welcome back to another weekly analysis video. This analysis is for the week of December 7th, 2025. As always, we'll start off with a weekly review of last week's price action and then move into the analysis for next week. So as you can see, starting from Monday until Friday, we didn't really do a whole lot. A lot of whiplash in each one of these candles for this particular week. And I had mentioned that I wasn't too, gung-ho about any particular direction. I had a neutral bias with a slight bullish undertone. And while we did move higher, it was very high resistance. It was very resistant in nature to go higher. A lot of whiplash, as I mentioned before. Okay? And in these conditions, you really either don't want to trade at all, or you lower your risk, because there's trades in here, and we'll look at those on the lower time frames. There was trades every single day, but they're very short term in nature. You can't expect big moves in these types of conditions, and this is typical of December price action. This is typical of holiday volume going into the end of the year. So this is not something unusual. This happens every single year for the most part. Okay? So we'll look into as we go down in the lower time frames, we'll look into the trades that you could have taken if you wanted to be a participant in any of these, whipsaw type of moves, okay? And going into next year, I will discuss more on how to utilize these levels I have drawn on my chart. And once you combine them and use them in conjunction with time parameters that I have yet to share or talk about, you know exactly what you're looking for. You know exactly what you're doing, and you're just waiting for certain conditions to pan out at a particular time. There's a reason why ICT calls himself the inner circle trader. And again, this will all be discussed in 2026. With that being said, let's go ahead and move on into the hourly chart. Alright, now into our hourly chart here. I have labeled the open Sunday 1800 on November 30th. And I've drawn a rectangle in this area in here to draw your attention at this area of price action. Okay? So from the open, we traded initially a little bit higher. But still, notice the quick decline down into here, and then the quick repricing higher after that. Whiplash. Move down, and then a quick move up. Moved a little higher, and look at this consolidation that lasted from Tuesday all the way up into Thursday afternoon. Not very high probability in this area. Okay, just a large consolidation for this particular week. 2 days worth of consolidation. I wonder how many traders were frustrated this week. Couldn't seem to find their direction in this price action. It makes you think that maybe I should just take December off as a trader. Trade from February up until November, and then take January, December off. But a lot of people don't do that. They think they have to trade every single day, otherwise they're not doing anything. It's counterintuitive to do so. Nonetheless, this large consolidation tripped up, I'm sure, a lot of people. But because you're here, you understand that, I was expecting this. We were expecting higher resistance. I had a neutral bias for the week. I had a slight bullish undertone for the week. And while we did move higher, again, look how high resistance in nature that this price move is. This is not fluid at all, like we have seen in the past, in the middle of the year, and so on and so forth. It's not fluid at all. It's not fluid like it's been the remainder of the year. And so because of that, you have to lower your risk or not trade at all. You have to know what you're doing in these environments, otherwise you can get burned. And so, going back to the open, an initial decline, repricing higher, consolidation, and then high of the week was formed in here, and then we came off of that into the close just below this area in here. Okay, so I'll discuss what I believe what will happen next after the review, of course. With that being said, let's go ahead and move on to the 15-minute chart. Okay, into the 15-minute chart here, we see the real nitty-gritty in here of the price action that I just talked about on the hourly chart, with the large consolidation lasting from Tuesday morning all the way up until Thursday afternoon. How would you feel if you were trading in this? Be honest with yourself. If you were in, let's say you saw a move like this, and you were like most traders, and you say, well, I think I'll sell it now. And then it just slowly comes back up and takes this entire move back from you. Or let's say you were in a price move here. Okay, you got in, maybe up here, you held on to it, but then it went into consolidation like it did for this particular day, which was Thursday. And it sat in consolidation all day, up until the close. Didn't give you any further down movement, but you were expecting lower prices. You'd probably be frustrated. And there is a way to be able to anticipate these things. Okay? And it's mainly based on time. You know, again, we're going into the end of the year. There are time parameters in which price will move, and then there are time parameters in which price will consolidate. Okay? The levels themselves, the power of three levels that we've discussed earlier in the year and until now, they determine the type of price move that will occur, the magnitude of price, how it will expand, and if we see large movements or small movements, okay, that is what the power of three levels do. Time tells the algorithm when to move, since this is all run algorithmically. Okay, that's what I believe, and that's what my mentor ICT taught me. It all moves algorithmically, and I firmly believe that once I figure certain things out. So anyway, my whole point of bringing you to the 15-minute chart right now is to look at this consolidation. You see a little bit more refined view of that, and this is not something that you really want to be a participant in. We'll discuss this trade going into the analysis for next week. How you could have taken a trade here, rode it a little lower, and then got out before all this nonsense happened going higher. There's all sorts of trades in here, and I'll point out 3 of them for you. Okay, I'm going to point out 3 trades that you could have taken. So with that being said, let's go ahead and move on to the weekly analysis for December 7th, 2025. Alright, and we're back on our daily chart here for the weekly analysis for the week of December 7th, 2025. So we're above this range in here, which is the equilibrium price point of this, and is also a stop run level. This range is a stop run level of the 26,244 level. Again, I'll note how it stopped here, repelled away from it, and now we're back here. Okay? If we don't start seeing rejection off of this area in here, I would expect this level to hold and then propel price higher. Okay, that's what I'll be looking for. Now, I don't know if we'll get to that high for the upcoming week, but I am still having a slight bullish undertone to all this. It could go back into this range and go into consolidation. So again, I'm not pushing hard for bullish price action. It's not like it was back in the summer where I was saying, yeah, we're going to go higher, we should target these highs, so on and so forth. We're now going into the end of the year. I cannot emphasize that enough. And the volume is dying down. Okay? So big moves are not going to be expected on my end. Okay. What I don't want to see is it start breaking down, coming through here in its relative stopper and area. If it does that, it will want to target the middle of this range here, these two purple lines in there. Now, notice how it's wicked in there. So it's already been there. So it should have no need to go back to that. So that's another reason why I have a bullish undertone for the upcoming week. So I am bullish, slightly bullish, with a mindset and keeping in the back of my head that it's low probability it could easily go back into consolidation. So that's what I'm looking for. Okay, so now we're on our hourly chart here. I've stated for the bias going into next week that I do have a slight bullish undertone, stating that it's low probability and that there is a possibility that it could go back into consolidation within the range from this orange level to that orange level. 24,786 to 25,515. Okay, so now we're going to discuss some trades that could have been taken throughout the week. And I'm going to start with the highest probability trade, which occurred on Monday. Okay, and it was probably the easiest trade you could have taken all week. Okay, so here we are, Monday, and what you're waiting for is the session open. Generally, you want to wait for the session opens on Monday going into the beginning of the week. So 9:30 a.m. for indexes in this case, the Nasdaq 100, the S&P 500, etc. Okay. When we were opening, we had the opening range in here. We were in this area in here. The 9 o'clock candle opened, traded down into the stopper and area of the 25,272 level. Okay. Once you start seeing price trade away and out of this relative stopper and area and through the above stopper and area of this here, it's safe to then say that it is in fact going in that intended direction that it is trading away from. So in this case, it's trading away from this in a higher direction. Okay, bullish. It's trading away from this bullishly. Okay. Once we see that, any down move on a lower time frame, like a 1 minute chart for example, it can be seen as an opportunity to buy. And that's exactly what we did here. We came into this, we rejected it with the bullish candle. Notice how it wicked down on that 10 o'clock candle. Wicked down back into the 25,272 level. And then came off of it for higher prices into this area in here. So if you're a buyer right here, I'd recommend buying in its relative stopper and area or at the 25,272 level. It should not go back to the stopper and area below the 25,272 level. So being a buyer in this area in here and holding on for the middle of this range in there for your first take profit, and then seeing if we can get back and trade to 25,515. While I didn't reach it on that particular trading day, we did eventually get it later on Tuesday. Okay, but this is just a very short-term trade in here. Okay, now we're going to discuss the second and the third trade, which are somewhat similar in nature. So the second trade that I want to draw your attention to is up in here when price hit the relative stopper and area above 25,515. Anytime we hit a stopper and area at a particular price level, we want to gauge how price reacts to that. Okay? So notice how it stalls in here and consolidates. So once we start breaking down a little bit through the relative stopper and area of this level in here, and we'll discuss more on that as we go into the lower time frame on a 15-minute chart, perhaps in this video or into next year. I'll discuss how you can keep reducing the levels and make them into a fractal nature to where you can see micro market structure types of breaks if that makes sense. Okay, I'll go more into detail into 2026 on that, but your attention is to be drawn into here, watching the breakdown on the lower time frame. Okay, once we see that breakdown on the lower time frame, we can then take any swing up back into the relative stop run area of that level there, and then trade it lower, which is exactly what it did here. Your first objective would be 25,515, and seeing if it could reach the stop run area below 25,515, which is this in here. Remember, as above, so below. As below, so above. Everything has to match. Everything has to be balanced. Okay? You'll probably notice that it rejected off into this stop from this stop run area in here, and yes, that is a trade that you could have taken for a New York reversal. Okay. The third trade I want to draw your attention to is a similar type of pattern. Do you see a theme here? How it rejects away from these stop run areas? That's what you want to see. Okay, as it trades into them, you want to gauge the reaction of it. We have it here on the session open for the Nasdaq on Friday. Same exact thing. We see the rejection in here, the trade higher through that upper portion. You could have really started engaging it in the middle of this range here. Trading through the upper portion, it comes back. You go on a lower time frame. It comes and touches that level again, 25,677, and propels higher into 25,758. Okay. There are so many trades on a weekly basis that you really have to just learn to be content with enough. Otherwise, you'll be like a dog chasing every single car. You'll be like a kid in a candy store. You feel like you can't get enough, you know, and you don't want to do that. You know, the saying goes, you know, the kid eventually has too much candy and he throws up, and the dog ends up chasing the wrong car and he might end up getting run over. You know, you don't want that to happen in your trading. You want to have consistent results and be content with enough. Okay. So those were just some trades that you could have taken throughout this week. So let's go ahead and move on to the 15-minute chart and wrap up. So on to our 15-minute chart here, a bit of a more refined view. And as we wrap up this review and analysis video, I again want to draw your attention into this block of price action in here, okay? Not the most highest probability condition that you can be in. However, as I've pointed out, there are still trading opportunities in a week like this where it's just consolidating. It's providing no sense of real long-term direction as to where it wants to move to. Okay? There are day trades in here. And day trading is very short term. You can trade both sides of the market in the same day, in the same session. Okay? There is no need to fear on missing any sort of move because they're always there. They're going to be there today. They're going to be there tomorrow. They're going to be there a week from now, a month from now, 6 months from now, a year from now. They're always going to be there as long as these markets are ticking and they're moving. There will always be setups, and if they're not shut down, there will always be setups. Okay, there's no need for you to fear anything at all. And that's kind of the theme that I want to bring into this analysis video for this week, is that there's no need to fear missing anything. There's no need to fear a certain condition. The only thing I'm trying to point out in this condition is that a longer term bias that's based on a daily chart can't really be obtained from the information that I have, from the information that we're getting, and how price is trading. Okay, it's has a slight bullish undertone, with a means of perhaps going into consolidation, okay? But there are still trades. There are still trades, and that's the main thing that I want to convey this week, is that there is always opportunity, and you can certainly take advantage of it. And going into 2026, I will discuss more on how you can trade in any sort of condition. Doesn't matter if you're in consolidation, trending, whatever it might be, you can trade any condition, and there's no need to be fearful of anything. So to recap, slight bullish undertone for next week, keeping in mind that it could easily whipsaw, go back into consolidation, and really not do a whole lot. You know, I expect more high resistance nature, so not really a whole lot of low resistance liquidity runs, meaning the price is very quick, sudden, fast movements like this right here to get to its objective. Okay? So, consolidation with a slight bullish undertone is what I'm expecting. Ideally, I'd like to see some more bullish price action pan out. So with that being said, that's going to conclude the weekly analysis for the week of December 7th, 2025. As always, take care, and God bless.